I'm John Jenkinson. What a day it has been over here in the grain markets. Let's get started first of all in our futures that are provided by Bar Chart. We've got about an 18-cent trading range in the May contract. We're up a dime at 5.49. That leaves us just a penny and 3/4 away from the top end of the range. But we're still got that spread trading going on in the deferred contracts. One of those is the new crop. It's December. It's down at 4.76 3/4. And it had been the new crop contracts that were kind of leading the way. We've got a 20-cent spread here in the May bean contract from the low to the high. Now we've, in fact, just kind of expanded on that a little bit. We're up 9.5 cents, though, at 14.22 3/4. That far out November new crop is up 3 cents. So let's move on to the Chicago wheat market. And we've got the July up 2 1/4 at 6.34 1/4. That gives us about a 10-cent spread here on the trading range. July Kansas City wheat also with a 10-cent range, up 1 3/4, 6.10 1/2. July Minneapolis wheat is up 3 pennies, 6.44 3/4. This cotton market really taken the premium out of this here lately, with the December down 76 points now at 83.44. And Todd Horwitz with Bubba Trading is here. You know, it's been, you said it best just before we went on the air, Todd. It has been an interesting day here. Notice, though, that in some of these markets where we had a sell-off last night, that sell-off was met by buying opportunities, or at least buying interest here in the day trade. So what's behind all of this?
Good morning, John. Well, I think what's behind it is we're in the same pattern we've been in. Every time we sell off, buyers come in. Early this morning, I said, I'm going to have to talk about they're going to be able to rally back already. And fortunately, before I got here, they've already started the rally. And this is expected. You know, these are in bull markets right now. Soybeans, corn, and wheat are all in bull markets, especially beans and corn. And they're going to, every dip is going to be bought up until that pattern changes. So we look for higher prices. We look for them to make new highs again. And we look for the rallies to continue until they stop. Now, again, there's obviously no way to know when it's going to be over, but for now, everything looks like it's full steam ahead, and they're acting exactly as they should. Every sell-off is met with buyers, and that's the way it should be.
Does the dollar play into this at all right now, do you think, Todd?
No, I don't think so at all, John. Again, I think dollar and commodities correlate, but they don't always correlate together at the same time. And the dollar is actually a little bit stronger, or was last I looked. So, again, you would think, maybe the commodities should be a little bit weaker, but they're not. And I think the independence of all markets eventually will correlate together, but at any given point in time, no, they do not.
Okay, so then a follow-up question to that is what would most interest some of these fund managers to come over now that we've got expanded fund positions possible here? What does it take to bring back that fund money back to this market in a big way?
Well, I think you'll start to see more of it come back, especially if the economy starts to open up. They are looking for more places to put money. And of course, the grain markets and the meats are the greatest trending markets when they get going, which will really attract the market. Now, you'll see if we can continue to maintain this rally and this solid uptrend, then they will start to pour money in, like hand over fist, as they say, and we'll see a lot of action, especially if you start to see a little bit of weakness in the equity markets. That money will be looking for a place to go, and there's no better place right now than the ag markets.
Okay, we'll be back in just a moment, Todd. We're going to talk about the livestock trade and get your thoughts over here in this meat complex next here on the Market Day Report. After a strong finish last Friday on this cattle market and trading at steady prices, we've got off to a higher start here today in these futures. And again, these are provided by Bar Chart. April live cattle up 45 cents a hundredweight at 119.45. But I was talking to one trader earlier in the day that said keep a sharp eye on that June contract. It's kind of now taking over as the lead here. It's up $1.10 at 121.50. It's got quite a premium here to the April. The August is up 80 cents, and we've got so far we've got about a $2, almost a $2 range, trading range in that June contract. April feeder cattle are up 70 at 143.92. May feeders are up 92, and the August is up 67. But after a big surge to the higher side, couple of sessions now, this hogs have been pulling back a little bit. April's down 97 at 90.42, May down 42. You go out to that July, which got really close to hitting $100. Right now it's down 10 at 99.52. But Todd, what's interesting about that is even though we got close to $100 hogs there on that contract, we're down only 10. So those deferred contracts are really strong. Does that speak to something anticipated down the road?
Well, I think, John, it speaks to the anticipation of the open economy. I think it speaks to the time of year we're coming into, which is a very bullish time anyways, the grilling season. And maybe, we can get together with parties again and get some groups together. And I think you're looking for people that are dying to get out and dying to entertain and start to move. And I think, they can do nothing but benefit all of the meats because, again, people want to get out to restaurants. They want to get to barbecues. Again, we're coming right into season. And the economy looks like it's opening right in the season as well. So I think everything is pointing very positively for the meats as well.
Okay. Again, I want to go back here to what you had said earlier in our grain segment about the economy and how the grains and the livestock could benefit from what's going on in this outside markets and the general feel. How do you generally feel about the economy at this point and how this could really open up the meats?
Well, I mean, myself personally, I'm concerned about the economy because we don't talk about inflation because we're using models that are 100 years old and we're seeing a ton of inflation. As I say, always ask any farmer if they're seeing any inflation. Of course, it's killing them. But I think the action in the markets itself speaks to where the money wants to go. And money wants to flow into these grain and meat markets or protein markets because they're great trending markets. And if we can get cattle to break above some resistance levels here, along with the hogs, I think, again, just like in the grains, it'll be full steam ahead, and we can see a very, very large move because I think this setup goes back to how the grain set up back a few months ago. So I'm looking for some very positive action and some very big moves to the upside as we go forward. And I think dips should be bought in the meats as well.
Okay, Todd, sure appreciate it. Hope you have a good afternoon. Tammy, back to you, ma'am.